Today you're going to hear about why the euro Swiss franc is your perfect buffer trade alongside your dollar longs that will flourish when your dollar pulls back. I'm the market sniper. I'm going to be taking you through a number of FX pairs, including the euro Swiss franc, the euro USD, the USD Korean won, the USD Japanese yen. You are in the process, whether you realize it or not, of trading a reset of a major financial system. Reset is a word that we use to brand ourselves for the great coming down of the financial system, only for it later to be taken by the World Economic Forum in terms of describing their grander scheme. You are with John the Baptist of the financial system. 2015, we stood on the hill of Greenwich and spoke about the great polarization of wealth that is coming and how people will be flattened into a UBI peasantry in what is going to be a technological surveillance finance oligarchy driven by the mega corporates that are held by the legacy old world order family, no matter how much they try to sell it to you as new. I'm going to show you which FX currencies are doing what and why. Last night on the euro Swiss franc, as a reminder of that particular chart's taking the eyes off, a major pair of rejections that occurred on the smaller time frame that emulate two shooting stars at a very small localized high. It is such a poor localized high that they almost don't qualify to be called shooting stars. They're inverted hammers. These are serious rejections that occurred at the 105 level. I will be showing you that, how we did this breakdown with our community in our premium area on a lower time frame with all the annotations and detail as to why it would be rejected there, forming an essential double top, which is a tweezer top on a candle wick level. Why euro Swiss franc is a great short in the pullback periods on dollar strength, and how the SMB has chosen to respond, and the absurdity of it all, that a country that is still on negative rates even after half a basis point rise. So showing you that, we will highlight that. A surprise. It was a shock surprise. We saw it. Technically, it wasn't a surprise for us. They raised its interest rate for the first time in 15 years. You have a huge property boom. Property is very expensive in Switzerland. The bank raised its rate to minus 0.25. To be clear, the debt in Switzerland still costs you money to hold. They will skim every year minus 0.25 from minus 0.75%, 0.75, that it had deployed since 2015. So 15 years ago, it had its last interest rate hike. 2015, when I stood on the Greenwich Hill and told you what was coming as a polarized event 7 years ago, they cut to minus 0.75. So they have been at minus 0.75% interest for 7 years since my Greenwich Hill video that has clocked 6-digit views. We've shared it recently. It regularly goes out. How to become the 9% in a flattening out of the 91%. I will be back and I will record a 7-year anniversary, like the bold version on an accelerated Halley's Comet spin. I will be spinning back the astrology center where astronomy was born, on the hills of Blackheath. Indeed, you will see me there. And so SMB still has a negative rate at minus 0.25. But such is the damage or the frailty of the euro system after the ECB themselves said, we will be getting tougher, we will be stopping doing this. Excuse me, the Italian bonds, we will take a run past. Italian debt, let's be clear, Greece is 1/7 of the economy scale of Spain. Spain is half Italy. Italy is actually one of the major players, but left out of the France-Germany cartel of two chums. Two's company, three's a crime. Italy feels very much on the outside and is one of the most anti-euro after the British that exited some time ago. We will take a look at debt markets today, as well as explaining why the Euro Swiss franc has been such a great hedge trade and why, after a parity run, which we called a likely rally was meant to occur, people who trade big time frame setups get bored. Many people have been going, when's your Euro Swiss franc crashing? When's your Euro Swiss franc crashing? Dollar dominance theme. Dollar rest after a very well signaled 0.75. Everybody accepted it, bought the expectations. So clearly the Fed leaks kind of well and everybody bought into the 0.75. The run up occurred before and the sell-off was chronic after. We'll also take a run past the USD JPY. This is FX markets. This is debt failure in a markets that have turned for the debt market. We were the first to say it in 2020 and still people are not recognizing it. Still they are recommending buying bonds. Okay, let's get straight into it and show you the macro, which has a lot of text on it. It'll get a little bit hairy over here, but you can see this. This was the final period where you broke out of a perpetual spill on the macro. We have called for 2 previous successful fails in the Euro Swiss franc, and this right here is our third. I'm going to take you off this time frame so we can get around the alphabet soup that is down there, straight from the monthly to the 4 hourly, and this was our premium updates to our community. Remember, two inverted hammers is this price behavior, and whilst it's met a localized low, we will show you this flag that we were also updating our guys on. Please understand, this is not a good pair to be long. So you could see that the 1.05, the blue line that we highlighted, was a key level. We'd identified, drawn this and shown this chart before. Even when we were rallying back up here, this chart has been in existence. We have various versions of it. It makes me feel like I need to prove that. There's so many guys that say, we said. I'll tweet out the previous draw following this on the Market Sniper. Remember to follow us at the Market Sniper. This rally of the Eurozone brought you to the key 105.05 zone again, where you'd been resisted, rising wedge, we called that break, spiller, absolute thriller, neckline there, target made to the downside, target touch once, twice, 3 times, 4 times, ledge-based foundation, back up to the 1.05, back down to that same neckline that existed on that smaller double top. Now you have a far larger double top as illustrated here in the blue that includes the areas of these conjoined highs and this high over here, giving you very much significant M-shaped spill. Yes, a little bit of respect there on the support and then down. But this time you have broken the key 1025 level, the 1025. It's giving me OCD that there's a 4 on there. Let's just reset that. Key levels of significance are very key in all aspects of what we do, and we recognize this, and this was a break of a very important key level. I'll also be showing you how the Euro Swiss franc has been in a range based bear flag heading up after it made a key event parity run that we had also been calling from shorting up at the 108s level well before. So let's go back up a little bit and say goodbye to that draw. You can see this flagging that has been going on for an extended period. It's even easier maybe on the daily time to see it, how clear it is. Ignore the text for a bit. I'll see if I can hide some of it for you. Bop, 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 bop. It's quite a lot. He has a lot to say. Does a sniper ever have a lot to say? Man, these are my times. This is my time. No one has seen as much of this coming. I've interviewed unbelievable experts that are all taught me something, have been absolutely awesome. I don't think there's a bad guest amongst them, but nobody sees the market moves like HVF method does for those that know how to utilize it. This is something that you too can see. You can build wealth. Building wealth is not a greed-based event that you should be pursuing because you want more money. Building wealth is a survival mechanism for what is coming to you. Please understand this. It's important to build wealth, not to be rich. It's important to build wealth because if you don't, you're going to get skinned, absolutely skinned into the peasantry classes. This great break, you should have been short up top here with 108s for us, right at the entry, 108. That means you've been in the money and actually saw a parity run already for the euro Swiss franc. Not that they wanted you to talk about it too much in the media. No siree. Don't forget, this is a landlocked to Europe nation, but just has a better sound financials in a relative sense. But debt at 0.25 minus 0.25 yield is a hypervaluation. It is only because it is less bad than all that is surrounded by Europe that they can get away with raising debt at that rate. This is, my friends, a bear flag. And you have witnessed, let me take the eye off, there's still too much clutter on there. You have witnessed a giving up of a bear flag over here. Since the parity run that occurred there on what was an absolute spill on a broadening structure that we warned you about earlier. Down, down, down. The gift of this is that your dollar long trades pull back and your euro Swiss franc trades have asserted. Remember, these two pump highs that were taken back represent rejection candles on that bigger time frame. Have a look at them again. Have a look at them again. Wipe your face, clear your mouth, and see what is happening. Two highly significant rejection wicks. Inverted hammer. This is no longer even a hammer. The red body is bleeding out to the downside. On the smaller time frame, as we point out, you've double topped at the 105 level. You've double topped, just run 105. You have a key midpoints in and around here. We can take it on the 1025, for example. That would be roundabout between there. So we can remove those others. Every aspect of that has been run. That points to just basic technical analysis tools. Points to 105 down to 1025, a revisit back to the parity levels. Maybe you just don't run the previous low. What about a small bear flag rally back up to the 25 or a rising wedge of some form before we fail? The Eurozone wants it both ways. They can't have it. The Italian debt, as we have highlighted, if you're following our Twitter feed, for the reset, nobody is seeing it like us. If we were Richard Hart, we've got more things to brag about than a shaky, dubious Bitcoin top call at 64,000. Love him. It's a little jab in the eye. But yeah, you know, there's lots of things that have happened. We will also be talking about the ruble, this real commodity-backed currency, which has now had its final blow off to the upside and is now probably the most backed currency. And when you talk to Brent Johnson, and his dollar milkshake theory, it will not necessarily be every currency that underperforms the dollar. And this, because we are technical, is clear to us. Macro technical people will get these points right where others may not. The assumption is too broad stroke that every single aspect of every currency will trade down. Here are those Italian bonds, by the way. Absolute blow off and heading back up again. Good luck, Europe. Good luck, Europe, he said. This is how we drew it for you in terms of that double bottom. Who doesn't like a double bottom? Here we go. Catchphrase 5.521. Play catchphrase innuendo bingo with the market sniper. Yep, 3 days. Let's do a 3-day chart. That is your last high at the 3s, showed a real key level. You also had a mini double bottom here that said, hey, you're going to make a target there. What happens at targets? A mild overrun and a pullback. Fancy that. You'd think we're making this up. Nice little upside HVF over performance. Break the 3. Up you go. You've got 5.5. What's that going to do to Italian debt? What do you think the euro is going to be doing with Italy bonds sitting at 5.5? You're halfway there. You're at the 4%. And at the 3%, we told you you're going up. At the 1.1%, we told you you're going to 1.8%. It keeps on coming. It keeps on giving. It keeps on reversing. People say, buy bonds, wear diamonds. Buy bonds, wear a pickle barrel and have the shirt taken off your back. Your pickle barrel will be in substitution. You will wear coal, not diamonds. This is a debt unraveling. Hear me again, this is a debt unraveling. 7 trillion was created. It is hyperinflationary. We are in a state of hyperstagflation with exceedingly depressed consumer and runaway inflation. They created this via intent, not incompetence. The intent is global impoverishment of the masses. Problem, reaction, solution. Here's our solution. You will eat it. You have no other choices. Protect yourself from government. Government is the one you need to protect yourself up at 4.0. What do you think the euro is going to be at when that hits 5.5? Stronger? No, sir. Euro USD is a short, remains a short. That head and shoulder we gave you was the beginning of a downside move. Do you think it's going to be stronger against the euro Swiss franc? Franc will be strong in periods when the dollar is weak. It's the perfect counterbalancing trade. The new 60-40 trade, instead of bonds and equities, buy the damn dip for 40 years meme, is short the euro against the dollar, short the euro and the yen, of course, the yens and euros of this world, the Korean ones. Squeezy Japanesey, you heard it here first, and I will win on the one. You will see us doing our victory laps in time, but in humility, because this is also going to be a time of great suffrage for many people. Watch this rally back. Watch this rally back. Failure to make a new high was puffing out. Higher high, higher low. In a channel, boom, up you go. Failure to make a new high, double top, neckline there, and a new neckline here. Short the 1025 neckline for a rundown close to the parity levels, where you will either get some fake support with some central bank support of the Swiss National Bank devaluing their Swiss currency, and a period maybe of dollar strength. On the Euro USD, where have we been? Let's remind everybody, where have we been? We have been seeing the markets more clearly than we've probably ever seen them in our professional career of calling this. This is the times that we are born into. These are the FX markets. This is a massive first impulse. You may get a little bit more, but you could trade lower. This head and shoulder was made. What did you get? A channel rise. Recognize that. See the euro Swiss franc. The dollar is just further ahead in the devaluation. You should have been short from up top here around the 118s. The final trigger on the head and shoulders was at 117. And you would have said, where's my profits when it rallied? And where's my profits when it rallied here? And where's my profits when it rallied here? You short, you hold, you shut up. Again, you short, you hold, and you shut up. That's what you do. You short, you hold, and you shut up and watch. Because this market is dying. This euro is a flawed currency. We have said it countless times, and the days of reckoning are arriving right here, right now. And banks will fail. Everything will fail. You need to be physical. You need to be physical in terms of your wealth. They want you digital, you seek physical. They want you, whatever they want you vaccinated, you go unvaccinated. Whatever the Bolshevik communist overlords seek, you seek opposite. This is the era of inversion. This is Tony Blair. Everything he says, you understand the opposite. You have to understand the dynamics. You are in a spiritual, psychological psyop war that is being perpetuated against you. We warned, yield curve control will not work out well for your currency. Corona will be broken. This 136 will fall. It seems we'll wind up when And it's understandable that we'll wind up. And when we break, we will smash 136 and go to new highs. We have upside targets, which we've already given you, even on the euro against the JPY, the great flawed currency. The yen is toast. You want to be betting against the strength of the yen. All those that said, I'm not in, you have to have the persuasion of your convictions to force your way into a trade where you are getting a dip, and when you should use money management and you should wait and see. You will probably get some degree of reversal opportunity that will be illustrated here. There you go. There is your slide for the downside. That's how well the Fed's action was made apparent, that the notion of a 75 basis points being released actually led to a major devaluation. It was clearly baked in all of this up move, although that inflation number only really came out on Friday, which was, I think, around the 10th. Maybe it was the 8th, I don't know. So it's clearly somebody's leaking numbers. You think this is a fair system. It is not a fair system. That is why I watch charts. Watch what they do, not what they say. Insiders have the money and are expressing their trades long before. This is a cartel of banks. The Fed is owned by other banks. That is what they do. They must build wealth and enrichment on their Forex desks with the best information that is available. This will, in my opinion, form some form of reversal and will be an invitation to go long if it's not already doing so on lower time frames. Don't go too low, but it will show you. And then you might have a move up, a secondary move down, another move up, a secondary move down. In 42 days, you will be having your next Fed meeting. How do you think those inflation stats will look then? Keep betting inflation on the overs. They're going to keep underselling and telling you everything's under control and being shocked. Shocked. We were shocked. Yes, they were shocked. They were also shocked by consumer sentiment. Granny Yoda, the nasty little Sabbatean Frankist, was telling you consumers should not be so negative. They've never had it so goddamn good. We had record employment rates. Pay packets are bulging. I've never heard a bigger crock of nonsense on a devalued dollar. The cost of living is killing. And they know it, that it's not incompetence. It is a manufactured lie. They are feeding you the story. They are all controlled. They are all controlled, and they're attempting to control narrative. This is the great school of narrative control. Let's have a look at the debt markets. We will go via the Dixie, for example. So this is a bit of a churn, a little bit of a loss of momentum for now on the euro, the dollar. But don't forget that euro is compromised. It will start losing again. That yen is compromised. It will start losing again on that pullback. You've also got the pound in there, which has had a horrific time. So they might rest for now, but long run, you're going for the 3.5 and ghost of a run there. Some people say, oh, head and shoulders. Well, that's already higher than your left shoulder. It wouldn't surprise me that you get something more like a complex wind up for the next squeeze higher on the debt markets. The debt markets are in trouble. The debt markets are dying. Your money was created in debt. This is your TLT. Every rally has seen a buy bonds wear diamond story, and we keep going lower. We're going to get to the point where we meet the COVID-19 lows where the Fed intervened. Only this time they don't have the same degree of license to do so. Refer to our interview with Daniela DiMartino Booth. Who else? Get us onto the best channels. The people need to know. We should be getting Jim Rickards on here. We should appear on all the top crypto FX channels. Help suggest that we get in here. We are seeing what is coming. People can get the news before the news with HVF method. This will spill and make a lower low than that and possibly run all-time lows. You are seeing debt fail. This is a trend change event. Again, I repeat it, I repeat it, I repeat it. It is a trend change event. If you are a technical person, this is a trend change event. The volatility was getting higher and higher and higher as you probe lower and lower and lower. Look at this. Can you not see it? Now you have broken out of an ever broadening structure to the downside with a head and shoulders that we expected when we were over here, when we got our first inverted and said you would bounce probably at the previous low where you had support and make a right shoulder. We said that, yes, way back in 2020. And we've continued to affirm that, and we've continued to lean on this view. The failure of the debt system is the failure of the fiat-based system. You need to be getting physical. You need to get physical. That's right. You need to buy. We have providers below that will deliver to your door. The USD Korean won. Macro trades. Oh, when the one. You're all so impatient. Not all of you, some of you on Twitter. It's not happening. It's not happening. It sure looks just fine. It's triggered. It's taken out. Legacy highs. Legacy highs. This is a monthly chart, guys. Legacy highs that were localized highs are being taken out. But for the extremity of the great financial crisis that had very small airtime above, you are already at candle level highs. Candle body level highs. We've been giving you this trade for the better part of years. In fact, we've been doing coverage on a currency that nobody has been doing coverage on. And this was your great Asian crisis. That's the 1300 level. Very little icebergs above that waterline, apart from the Asian crisis itself and a rebound and the great financial crisis. My friends, you are going to go higher than the highs of both of these. This is a dollar super spike that is coming on the basis of debt failure and yield spikes. The people that are having you buy debt are wrecking you. Absolutely. There is going to be a devaluation, a shortage of liquidity in debt that is going to be crashing in like a black hole and sucking in all liquidity and cash. People are going to be getting margin calls. Money is going to disappear. If you think that means the absolute bottom for Bitcoin, I'm here to say no. Things will rally. Targets have been made recently. So we pivot to indices. Indices, yes, indices, my friends, indices, stock market indices. Remember all those guys on my Twitter feed that said that's not a head and shoulders, that's garbage, you don't know how to do technical analysis, that's not going down. We like a good enemy. It's just to make story. Anyway, lots of them in there, all friends and followers of Mr. Hunter. We're expecting a mega melt up in the next 4 months. That fact that call had been moved and moved and moved. It's been postponed and postponed. You'll eventually be right. We all know stimulus will come, but it will come after much more pain. Well, guess what? That head and shoulders we drew, it's made target. It's made target to the downside. It's made target to the downside. Can you get a rally now? Sure, you can after a first target. Does that mean it's over the bear? No, it doesn't. Head and shoulders are cyclical reversals. So what you do is you get a rally now. Everybody goes, you were wrong, forgetting that we've already made the head and shoulder draw target that you said was never a head and shoulder. Oh dear, down to 30 from up top here when we were starting to discuss it, and into a rally that took you up to 35. Yes, you're going down. Our SPYs are short. Our Tesla is short. Our ARCs are short. Everything is short. There is a hypervaluation in town. IXIC, the NASDAQ, it's the one that hasn't made its head and shoulder target. It's probably the only one. More to come. Much bigger head and shoulders, much fluffier valuations. That had a rally right up top to the 14,659. Guess what? It's traded as low as 10. It's got a run through 9. And that too will still only be the beginning of a much harder asset revaluation. Because you can't ignore the debt markets. The volatility on equity is not responding yet to the full volatility on the debt market. As if they're two different universes. Watch that debt market collapse and then see what it means when these businesses that have been borrowing money at low rates to buy their stock back now have to pay higher interest rates on their debt. Good luck. Bankruptcies, everything. Debt collapses, big corporations, many of them non-cash developing. There's a shelf of junk debt that should be rated junk debt that is just above the junk debt. That should be going down. I'm talking about things like the HYG and many others. They are all due overration. We are seeing a bonfire of asset valuations coming as a result of debt market failure and interest rates due to your overlords intentionally creating so much money that they've absolutely created a surefire event of inflation, hyper-stagflation, in fact. So if you have a look again, what we were looking for, high yield debt was what we were looking for. I think I've already shown that one to you. TLT is the one we're looking for. This is the head and shoulder that we said we'd show you again. For some reason, I've lost all my drawers on that. Probably hit the delete button by accident. There is your head and shoulder. There is the inverted ascending structure that we said is typical of end of trend, very difficult to spot. It's kind of like that after a slap in the face. That was the beginning of a route. That started slowly, eventually bringing you back down to this head and shoulder neckline level. And then we sat through a rally, we stuck to our guns. This is the top end for debt. Buy bonds, wear diamonds. Another rally. Oh dear, oh dear, oh dear. The memes, down, the rising wedge, down, the rising wedge, down. The gaps to the downside, my friends. Absence of bid. Nobody wants the debt. The institutions, which are the buyers, the pension funds are the buyers. They want something that goes up. They've got deficits. They don't want to buy something that's collapsing in on itself. Of course, what do? And here you have the Italian debt, which we've already shown you. This is the yields. This is the 10-year treasury yields. Oh boy, a different draw, the same outcome. Doesn't matter how you look at this, friends. This is a macro technical event. You have taken these previous highs. This is a macro technical event, and it is with real momentum. First upside HVF in a new trend leads to overperformance, etc., etc. Go to themarketsniper.com, book a call. We have a lot of demand coming in, but it's awesome. A lot of awake people, a lot of crypto people understanding that there's more economics to be discovered in the grand macro. A lot of FX and gold buyers coming in. These people are understanding that things are going wrong. You can trade and make FX profits converted into physical gold. You are building wealth that they cannot take away from you. You can hold it in your hand. This is one of our providers over here. This feels like the perfect 1 kilo that it is in its little matchbox. This, my friends, is real money. This, my friends, is real money. Links below. You can buy on Bullion Vaults monthly, electronically, cash it out and place an order physically once you've got to a key level so that you get the upside. It's got an old nag's head on the other side. 4 nines, real weight. It's sitting in its little condom. It's not had love made to it. Don't worry, give me a chance in a future keylers. I'll be all over it like a dirty rag. Here we go, my friends. This is real money. Certificate of truth. This is real money. And you should be building wealth to save your family as the person looking after the finances from what is coming, physically held and owned. After and during this process of this massive reset that you will all notice and see coming, will take real silver and gold for services as real money, actively and happily. And many others, when the chips are down and the banks are blowing up and you haven't taken enough cash out of the system, you haven't got enough silver and gold, you haven't got food, bullets, and the rest of the prepper, you're still not self-reliant enough, you will be able to purchase things with that and smaller versions thereof. Links below. I've been using SimpleFX. I've been pledging crypto and USDC and trading FX. That's the irony of the whole situation. We've been shorting crypto. This has been an incredibly good month for us, for many of us. And others have not lost in an environment where everybody else is shrinking, which means in a relative sense you have gained wealth. Many people are actually doing very well. Your jobs are going to be taken from you. Forget about your security of tenure and the safety of your industry. There is true drama coming your way. The ruble. Have a look at the ruble versus the yen, would you now? Now there's an interesting currency pair. So let's just go on to the ruble, the USD ruble. So the one thing is Brent Johnson, for example, who named the dollar milkshake theory, was a little early with calling it and talking it up. Of course, the events of COVID crashed the dollar. Technically, though, we were accurate. We said it first goes down, then it turns. but that his theory is a good call. His theory is a good call at the wrong time. Now he's coming into season, but also he's generally a dollar maximist on all things. We call this a blow-off event on the ruble that saw the final end of devaluation in the ruble. Now it is a trend change. We believe the ruble is stronger as a commodity-backed currency than even the dollar. And in spite of dollar spikes at times to come against Western-friendly Eastern nations such as Japan, Korea, etc., and of course the euro, etc., etc., this particular structure is likely to see the ruble appreciate on the general terms. Of course it will be volatile, of course it will be choppy. People need oil. Oil is the driver. It's the original global tax under the realm of Rockefeller and Rothschild control. British Petroleum, Shell in the Middle East and everything were controlled by the Rothschild family. Rockefeller cornered the US market. This is two teams working together. It's a globalized tax. They dumped it to pump it in every way. You are participating in an expanding fiat creation mechanism that requires usury, that always see money always be in an expansionary increasing cycle. That is how it works, and thereby it eventually fails. You have to have ever lower interest rates to sustain this ever increasing debt that can't be paid off. So let's have a look at oil, for example. We will also take a look at gold and silver. Gold for now, nothing too much. Hold it physically. In the longer term, this goes higher in our opinion. Gold euro, in our opinion, this will go higher too. Watch out for this structure over here. Gold euro will be a good trade. Accumulate at these levels for an upside. This is more about euro devaluation, I suspect, than amazing performance for gold dollar. But in the long run, it will move like a crypto, my friends, when the bridging era comes, and you will not be able to. You will not be able to get your hands on it in any form. The same will apply for silver. Right now, a little bit of a flag here. Looks like it can go lower. Later, in the later period, after the devaluation and the chase for liquidity, which is likely to put pressure on the likes of silver and some of the others, you will eventually see extremely high. So USD WTI, we called for this rising wedge and we wanted it to come off a little bit, and it has. How long do you think the dollar goes down and the oil goes down? Not very long, in my opinion. So you will have an oil re-rating given this very long-standing grind up. We called this rising wedge. We said the bagel will break. We expect you to get a downside. Then it will start slowing down, come down, maybe bounce in our funnel. We've called for the 104 to 107 level. 105 is roughly in the middle there, that you might get a little bounce. Maybe you just run it and then you go up over here. We are expecting a continuation pattern. We already have our secondary high, brought to you by your Federal Reserve for 75 basis points. We are going to curb inflation. No, they are not. There is an insufficient supply, and you have deglobalized, and you are taking Russia supply out of the market. You are only going to make the Rockefellers ever richer. But don't worry, we will punish them with super profit taxes. No, you created the inflation. You're making it unworthy of them to make future development. Why should they care to make more money if every time they have a good year, you're going to take all the money? And hey, I don't have a truck for oil companies, but did they get a subsidy when it traded down to $1? I didn't see that. Oh, okay. So it's a kind of a tax. This is populism, political populism, to be seen to be doing something. All that is further quantitative easing to give everyone in the UK a once-off £400. What the hell does that do? Oh, and if you're on if you're on benefits, you can get another £650. Okay, a once-off £1,050. What does someone do with that? Buy a couple of Mickey D burgers, pay off his electricity bills, and in December, then what? When it's middle of the winter. Oh dear, oh dear, oh dear. It is just a fake, once-off, politicized, quantitative easing scam. It is a scam. And what about that benefits tax that comes off the oil guys? Well, it's like Rothschild and Rockefeller paying the left hand from the right hand. They are the tax extractors, and they are behind and owning the oil and the ability to oil. So this is spilling fairly hard for now. Expected slowly to slow down in days to come and to base. I expect it to base above the $100 mark. Where will we be wrong if all our prognostications turn out to be inaccurate? How do we be wrong? You run hard down, really hard to 95, and you do a weak rally like that, a flag to 100. This would point to a more secular turn in inflation, which would mean eventually they're likely to curtail some of the energy costs. It's going to take a long time. Remember, year to year, when you have a higher year and in a year's time you're measuring it to a higher year, the percentage can be flat or only marginally up, and it'll sound better, but your costs are remaining elevated high. That would be how it goes wrong if we come down really hard. It could happen. It's falling hard now. That doesn't mean it'll go all the way hard. The forces that drove it up to there haven't gone away forever. So I'm expecting more like, but I will quickly revise my view if the market momentum changes. I'm expecting more like this down to say here, a little bit of up-Z, a little bit of down-Z, and so we go a little bit less vigorous on the down-Z, a little more up-Z, and then a little bit of final down-Z and a bit of up-Z. So she goes in time enough. So I am going against the trend of the short term, that is the sell-off, and I am staying long the bull bias of energies. Long the bull bias of energies for that. So that would be my scenario. Yes, you can come down like this and be a bit ahead of mine, and then later you'll be a bit of ahead on the upside and you'll be making it. So I wouldn't expect a wick low to go too much below the 100K. But when's it invalidated? It's invalidated if we trade sub 92.50. So it's at 113. You're talking about another $21 in the oil market to move before that occurs. So this is your update. This is your update from me on what's going on. You think this is useful? You think you can manufacture a trade? Well, you'll do a whole bunch better if you're in the premium community, knowing where to put your stops, where your rewards are, etc., etc. I would stay with a long bias, but I would not be long right now. I'd be expecting oil to go down. Okay, so we've given you the opportunity for the dollar to return. In 42 days, you have your next FOMC meeting. You're going to have data coming in during that time. I don't think, especially in the beginning, too much of that data is going to support you too far. Remember to get physical. Banks will fail. Bailout clauses exist. So we did the ruble, we did the euro Swiss franc. Did we do the euro USD? We did the euro USD. Did we do the FX? We're doing a lot of FX. Did we do the USD try? Did we do the USD try? Try. Still losing, and it's going to continue to lose in my opinion, but it might have had a little bit of respite. Let's have a look at the USD try, 17.32. Boy, oh boy, didn't get too much joy out of all of that on the day. The try is just in a perpetual state of loss, getting close to these other levels again. Oh dear. Will it have a pullback? Lots of little HVFs for upside. Look how they form at the previous one's targets. Windy up. I wouldn't chase in at that level, certainly at that point. And the South African Rand, what is it doing that it's held on so well for so long at these levels? It's almost got a fixed level around here. Well, it was as low as 13.3, so it has got more devalued recently. And what is the structure we're seeing? Possibly opportunity there, but don't forget they have gold, they pull it out the ground, and platinum. No longer the biggest producer by a long way, but still a big producer. The Hong Kong dollar, my friends, the Hong Kong dollar had a little dip, but it is stuck at the top of those pegs. You need to have your alerts in here. You need to have your alerts for this peg failing. It's our opinion that as the Korean won starts its journey, as the Japanese yen will resume its journey, unbelievable stress on the Western-friendly Asian nations will occur. Well, Hong Kong was that. It's slowly being flippened over. The Hong Kong dollar is likely to die as part of any Chinese plan, certainly. And a lot of these pegs are going to fail. There's a lot of currencies with pegs. You've got the Danish krona pegged to the euro. You've got the Saudi riyal pegged to the dollar as well. There are many pegs that could fail. Look at this chart. A little dip down and then you're back up. This doesn't want to let go. We've been putting people long on the Hong Kong dollar for an extended period. You're going to be wrong. Waiting. This is macro trading, guys. This is macro trading. We had an upside HVF. We jumped in over here on the Hong Kong dollar, way down over here. And since then, we've been sitting in a little bit of profit and waiting. So that's the nature of the game. But when it goes, it goes. How did it go last time? Let's have a look. Let's have a look. By the way, Brent Johnson has also mentioned this one. I think Kyle Bass has too as well, and I think they will be proven right, as will we, on this frailty of this peg. When it goes, it goes. Their reserves are not vast. Their property market is hopelessly overvalued. I would guess a similar degree of descent could see you run to the 10s, 11s, and possibly even to the 12s. Don't forget, last time you went from 4.6 and you ended up settling. You had a super spike actually, which took you to 8. Almost 100%. 100% from 7 would take you to 14. I think getting into a super spike, getting out at 12s, would be a very, very good trade. Guess what? You'll make out like a bandit. You'll make out like a bandit. Turn it into physical gold. Turn it into physical silver. You cannot be touched by the digital men. Okay, that's all for me. Let us know. Get us onto some shows. We want to talk about what we feel we're getting accurate. The debt market failure that so few people are still yet to realize. They're in belief systems of BTFD, the 40-year meme. They can't believe it's over. They don't want to let go. They're still in exponential mindsets on crypto. When you're having asset devaluations, highly liquid things will go to make rent checks. This could get worse. So we may as well touch for a short second on Bitcoin. While it has made a short-term low for now, it is our opinion that it will probably flag or rising wedge back up to the critical 25 levels. Maybe it'll get that far, maybe it won't. Only, you see we drew a bit of a flag here, only for it to subsequently sell off to new lows, which could involve at its most maximum and even beyond possibly a round trip run through the 8,000. But it could also stop at 12 and 15. I don't think this is the absolute low, but you could require a lot more to come. We've been watching Bitcoin's relative performance against tech stocks. Unfortunately, it did not hold this level against, that's the BTCI, that's not the one I wanted. That's the one I wanted. It did not hold this level. That means it is relatively weaker to the IXIC, the NASDAQ, and NASDAQ stocks. So until Apple breaks, until all these other individual tech stocks really start to show that they are in deep, deep trouble, such as Apple is probably our bellwether for tech. We need to see far bigger sell-offs out of the tech giants. Then you will see the recognition of a crushed consumer. There could in fact be, even now as we speak, head and shoulders on Apple. Many won't want to see it. Many will say that's not real head and shoulders. Many who never took these longs on upside HVFs and took these targets will not acknowledge them. You could have that as a left shoulder. Complex man piece off the roof head. And a right shoulder. In short, you could have recently just triggered on an Apple. By the way, that was in and around $183. This is in and around $140, key round number. That would be another $40 to the downside. And remember, just like with the others, a target can be made, but it can be surpassed because head and shoulders are secular reversals. So that's a couple of thoughts for you, generally, in terms of what's going on. All right, I hope that was useful. Ruble, your new king currency. Euro Swiss franc short to cover you when the dollar pulls back. Why it's useful to have both trades. FX, fiat, market failure. USD indices with asset value devaluation, along with bonds that are devaluing. And your 10-year treasury in America is your key sign as those interest rates continue to work up. By the way, it was possible that they were going to do 75 basis points. Now it's a certainty. Those bonds need to start thinking about pricing what's likely to come next. What's coming next in the grand market scheme of things? Will you get further? If you have a look at the 10-year, you are staying very close to all-time highs after 75 basis points has already been priced in. So it is not backing off, and it doesn't think the interest rate hikes are over. Okay, till next time. Thank you for watching. Go to the marketsniper.com. We also have a new results page. Go to our results page. Have a look at some of the things we've done before. None of this is in there. This is all recent. This will be new history that we're making. We really trade. We get a lot of things wrong, and we also get a lot of things right. Thank you for following us. Get us on your favorite shows. We'll appreciate it. Contact them and say, it's time you spoke to at the Market Sniper, at the Crypto Sniper, about the end of the debt markets and all the repercussions that bring it and why it is being flagged technically in the charts. Thanks so much for watching. We'll catch you next time.